Untold riches. Mm-mm. Business Insider, we cannot escape this. Okay, all right, all good. Variant debuts new 110 million fund for crypto startups. Announces Legion has joined as general partner. Wow. I actually had no idea about Jesse Walden's story. That's pretty cool. So he was managing artist early 2000s, then had Media Chain Labs acquired by Spotify, then spent time at A16Z, and now he has Variant.Fund. We realized that there was quite a bit of overlap and convergence in the themes that we were investing against. We, the passion economy, and Jesse, the ownership economy. We co-led several deals together and we co-invested in several deals together, and it just became quite clear that the two theses were two sides of the same coin. Interesting. Hotels Decronchy has joined Variant as its third general partner, merging her firm Atelier Ventures with Variant after deploying the entirety of her own creator economy centric debut fund. Overlap during the time and recent Horowitz, and despite considerably different founding theses for the solo GP firms, found plenty of shared interest as they deployed their respective funds during the pandemic. Sin has cultivated an outsized presence in the tech investor community in the past couple of years, building up a reputation for spotting trends in the creator economy space. She spent nearly 4 years at A16Z helping the venture giant source deals before leaving last summer to start Atelier Ventures. Jen officially launched a 30 million fund this past Feb, though she had been writing checks throughout much of 2020. 421, Jin has grown more outspoken in her views that technologies born out of the blockchain, like NFTs, may be the key to the next generation of creator monetization tools. I raised my fund really as a traditional consumer Web2 fund. As I started deploying and spending more time in the ecosystem, I realized that crypto actually offered this really powerful tool set for aligning incentives between platforms and their participants. Delhi has had significant crossover with investments led by A16Z, particularly on the crypto side of things. In addition to backing more traditional creator platform plays like Substack. Portfolio of investments also includes NFT startup Yield, Guild Games, DAO platform Syndicate Protocol XMDP, and crypto publishing platform Mirror. Reed has participated alongside both Atelier and Andreessen in a handful of deals, but has also backed competitors as the firm has dug deeper into the emerging worlds of NFTs, DeFi's, and DAOs. Variant's portfolio includes decentralized crypto exchange Uniswap, NFT Platform Foundation, and crypto wallet Phantom. Walden notes that many of the founders in the firm's portfolio are also backers of the new fund to itself, an effort Variant has made to leverage its network to stay competitive with bigger funds. As the space continues to expand, we obviously can't hire 100 people in-house. And so we decided we need to take a network-driven approach. And in order to build a network that grows bigger, faster, and adds more value to all stakeholders, we just look to our thesis, which says that the way to grow bigger, faster, is to give ownership to your users. So who are our users? They are founders that we back and other builders in the space. And we have over 100 of them in the fund, meaning they own the fund itself. Ooh, really cool. Really cool. Before we go there, let's see what the latest updates. Writing, advising, Variant Fund, moving back. Whoa, what is happening in the formatting? Hmm. Moving back to Westhoff after 4 years away, nomading in NYC, looking to build community and host small gatherings. In vibrant discussions, meet people who are passionate about how they spend their time. Spend more time exploring museums, galleries, make art. If anyone wants to join, please let me know. Okay. What is happening to the formatting over here? It's a good time to take a long-term perspective and refocus on what you believe in. This is likely just a growth scare, and the outlook for crypto remains bright. Jeff Hamilton, Variant.Fund, investing. Morpho. Morpho. I have a couple of friends who work at Morpho. That's good. Jesse Walden, users to owners at Variant.Fund. What is this image about? Let's ask Grok. Yeah, Grok is right here. Grok. What is this image? Let's see. Architectural rendering or conceptual drawing of a futuristic building complex. The design features sleek, modern structures with angular crystalline shapes, possibly made of glass or transparent material. Okay. Conceptual design, sci-fi futuristic architectural vision, artisan interpretation of a sustainable smart city building. Recent conceptual project. Okay. It's just cool photo. Okay, cool. DAOs 2.0. All right, what do we have? This was written in December, it's a couple months back. In 2014, Vitalik defined DAO as follows: an entity that lives on the internet and exists autonomously, but also heavily relies on hiring individuals to perform certain tasks that the automation itself cannot do. An entity that lives on the internet and exists autonomously, but also heavily relies on hiring individuals to perform certain tasks that the automation itself cannot do. Automation at the center, humans at the edges. Automation at the center, humans at the edges. The reason automation, this is pretty cool because I believe this is Chris Dixon from the book Read Write Own, where he's talking about how in Web 2, power concentrates in the middle. If you take the example of Uber, the drivers who contribute to the ecosystem don't have the power. The power is in the center, the corporate entity Uber. But in crypto, the Web3 version would be where power is in the hands of the nodes. The power is not concentrated. What's the opposite of concentrate? Concentrate, concentrate, diversify. No, but concentrate in Web 2, power is concentrated in the middle. In Web3, power is concentrated, not concentrated, but power is in the hands of the nodes, and the nodes would be drivers. So the Web3 version of Uber would be where the drivers would have the power and not the entity. The entity is just autonomous right over here. It just exists autonomously, but also heavily relies on hiring individuals to perform certain tasks that the automation itself cannot do. But again, if we talk about self-driving, that's totally different. Now we don't even have drivers. But then the humans are then the users who are actually taking the ride. Okay, interesting. Humans at the edges. The reason automation at the center is so important is closely related to Nick Szabo's concept of social scalability. Social scalability is the ability of an institution to overcome shortcomings in human minds and in the motivating or constraining aspects of said institution that limit who or how many can successfully participate. Social scalability is the ability of an institution to overcome shortcomings in human minds and in the motivating or constraining aspects of said institution that limit who or how many can successfully participate. In 2020, 2022, we saw a wave of DAOs that were not this. They were more like co-ops with humans at the center and little to no automation. And like most co-ops, they fail to coordinate at scale. And then it's all about an incentive game. You just have to The DAO that will win will be the one with the best incentives. So it scales more and more. The existing users are incentivized to contribute more. The existing users are incentivized to bring on newer users. The newer users are incentivized to join and keep making this entire entity sustainable. And it could break at any point. Like we have those MLM schemes where yes, the current users are incentivized to bring more users. That's exactly how they get paid. The newer users are incentivized to join because they hope for making more money. But then the newer users actually don't end up making money, and that's when the entire system fails. So you have to make it socially scalable in such a way that yes, the current users are incentivized to bring on new users, the newer users are incentivized to join, but then even the newer users actually gain value, so they are incentivized to keep contributing, and the system never fails. We saw a wave of DAOs that were not this. They were more like co-ops with humans at the center and little to no automation. And like most co-ops, they fail to coordinate at scale. Today we are seeing a wave of AI agents doing things on chain with varying degrees of automation. Many of these agents are tokenized, meaning they have capital at their disposal and a network of owners, at least some of which are human at the edges, who have capabilities that models don't. The way I've been thinking about the emergence of these agents on chain is the true beginning of DAOs 2.0, where agents have the potential to put the A back in DAO, decentralized autonomous organization. With AI automating day-to-day objectives, the role of humans can be minimized to focus on providing capital, nudging, guidance, long-term planning, and other resources the models do not have at their disposal. For DAOs 2.0, the question is, what are models uniquely good at today that can be fully automated with minimal human intervention? LLMs are the most obvious example of AI models that are self-sufficient because they can parse human language and take predefined actions without any additional human touch points. Exactly. This is where Farcaster Clanker comes on, which is not only an AI agent with a wallet, but now also access to a social network where people can easily. It's beautifully placed, and Farcaster is in a great spot to enable something like this, where you have an account, which is an AI agent. Everybody on the platform can talk to it, request it, just tag it at Clanker. Hey, what's up? It actually responds in the comments. Everybody else can see it. So it's transparent. It has its own wallet. It has this entire LLM thing going on where it can actually make decisions. It's pretty cool. Inbuilt distribution right there. And Farcaster uniquely enables it. You cannot do that on Twitter because on Twitter, an account cannot just have a wallet. You can build an AI agent like Ask Perplexity. You can tag Ask Perplexity on Twitter, and it can respond to a question, but cannot take an action. It cannot take an action. Cannot create a token, something like that. This unlocks text-based intent marketplaces like Clanker, an agent on Farcaster that uses natural language to enable token launching. Diffusion models also require very minimal human input. For example, Boto uses a diffusion model to create 20 to 30K images a week, and another model filters out what it knows are objectively bad images. Hmm, interesting. Boto uses a diffusion model to create 20 to 30K images a week, and another model filters out what it knows are objectively bad images. This model set of contender images is presented to the DAO, which chooses the most marketable or valuable piece to auction off as NFTs through simple yes/no voting. The role of the humans at the edges is limited to high-value strategic decision making. To date, Boto has generated 5 million in network in NFT artwork sales. Wow. Diffusion model to create 20 to 30K images a week, And another model filters out what it knows are objectively bad images. The smaller set of contender images is presented to the DAO, which chooses the most marketable or valuable piece to auction off as NFTs through simple yes no voting. The role of the humans at the edges is limited to high value strategic decision making. This is very interesting. This is exactly where humans come into play because humans have way more context around culture that, hey, you can just create a bunch of images, but there's a certain image that a human would know who understands culture, who hangs around with more people, either on internet, either in their in-person society, and they would understand that, hey, this will hit, this will be a hit, not because it's just not because it's just good, just because it evokes certain emotions that are relevant to the time today, and it would hit. It's really good. Okay. Moto uses a diffusion model to create 20 to 30K images a week, and then the model filters out what it knows are objectively bad images. The smaller set of contender images is presented to the DAO, which chooses the most marketable or valuable piece to auction off as NFTs through simple yes/no voting. The role of the humans at the edges is limited to high value strategic decision making. To date, Bodo has generated $5 million in NFT artwork sales. What an example of something I don't think current AI models can automate well without significant human touch points. Anything requiring long-term planning, like long-term investing. Long-term investing has a lot of unknown external factors and requires fuzzier data that is difficult to capture or requires significant human labor to wrangle into a digestible format. Compare this with an on-chain trading bot. It can use simple deterministic algorithms with information that is readily available to it. Example, price of an asset. To react to information and execute an immediate strategy. The broader point is that DAOs 2.0 should track the strengths of AI, and as model capabilities grow, the set of objectives they can accomplish grows, and thus the size of the DAO's economic influence can grow, as many originally hoped. I'm excited by that and eager to see more breakthroughs in economic activity agents can automate on-chain. Compare this with an on-chain trading bot. It can use simple deterministic algorithms with information that is readily available to it to react to information and execute an immediate strategy. Pretty cool. Two good times to launch a token when you have BMF, day zero. What is happening to the formatting over here? Okay. How much of a network investors will own in almost is almost always less important than building something people want to own. As long as community owns a majority over time, that's the goal. Ownership economy, VC. Ours truly. The ticker is Zora. Every app will be a wallet. Demo Network team has been amazing to work with building the future of connected cars needed an effortless experience. Check out the case study below. Turnkey has helped them cut onboarding time by 90%. Demo is making crypto onboarding seamless with Turnkey, 90% faster onboarding, 30% more users completing sign up, 3 week integration. Demo Network. Drivers get the most from their car. Drivers get the most from their car. Download the app to connect, on rewards, and build the future of mobility. Okay, really cool. Demo. So what exactly is happening over here? Next protocol, org, zero stars. Deepin needs AI to become more powerful and autonomous, but AI also needs Deepin to achieve scalability. Let's quickly see the website. Demo, access, vehicle, insights, earn weekly rewards, save on maintenance. The universal car app that makes your car smarter. Access insights, connect to an ecosystem of apps, and earn weekly rewards, all while keeping your driver data private and secure. Plus, with an existing car app or a demo adapter, anyone can connect. All right, what do we have here? What is, how is this working? Your cars, you're connecting a bunch of cars, healthy, change oil, okay, rewards, garage. It's kind of a garage compatible with cars from all these companies. Use your data, you should too, okay? Data generated by cars is valued in the billions, but the driving data and profits are never shared. With Demo, you will earn rewards every week simply for showing up. Plus, if you choose to share data with our partners, you will get bonus rewards and personalized discounts. So I know Cred in India does something similar where they have this Garage app, and the Garage app is, yeah, basically gives you a lot of details like that. Over here, it's talking about number one, for user, you can now track all your car's data on phone. And number two, if you want to share your data with their partners, you can get discounts. Okay. Download the app, connect for free using an existing connected car subscription or use our plug-in adapter. Unlock driving insights, track your car's health and GPS location real time. Car's health and GPS location real time with complete privacy and control of your data on weekly rewards. Deposited into their account every Monday, no strings attached. Get insights into what's going on under the hood. So these are rewards. Track your driving habits. Okay. Predicted this year total. That's pretty good. I think this will come into a lot of use when, let's say, every car gets self-driving cars. Every car gets, this will be of big use, especially when you go for insurance, because now, but the problem over there is it will give you a lot of savings. Insurance companies now have more data. So, oh wow, so many things happening over here. So insurance companies will have more specific data on your car so they can figure out your insurance payment better. But does that mean that your insurance payment will go down and that will be a loss to the company? They'll be like, why should we use it? Or Demo becomes the insurance provider. They'll be like, okay, we will become an insurance provider now because your insurance company doesn't have all this data, so they are just charging a flat fee, which has to be really high. But because we have a lot of your data and we know that your driving habits are good, we will charge you less insurance. So Demo could become an insurance company. Okay, really cool. Really cool. And especially when all this self-driving concept comes about, self-driving, let's say everybody gets the FSD software update. Tesla just starts selling their FSD software to every single car provider. What's going to happen then? What's going to happen then? When it's going to just, when every car is going to have the FSD software update, now you have a lot of data about each and every car. And the owner could be like, let me just plug my car into the ecosystem, let my car just go around, drive people around. I'm just sitting at home and collecting rewards, something like that. And just with one app, you're tracking all your data, your choice. Okay, very interesting. I'll give it a follow. We will keep a tab on this company. Crypto has always been liberation at heart. Most of us working here never wanted government to buy our bags or give blockchains a regulatory moat. We just wanted to boot off our necks so we could compete in the free market, less strategic reserve, more protections for devs. Jake Chervinsky. Oh, lawyer, CLO for Variant.Fund. Wait, previously where? Ex Compound Finance. Prior crypto market cycles had far fewer sophisticated liquid traders. Assets moved in lockstep. on the back of flows in, out, up, down. Today, sophisticated liquid traders take any catalyst as an opportunity to pump and immediately dump as soon as retail reflexively follows in. This happens across memes and serious projects. The result is, as time goes on, the easy mode promise of crypto is broken. The only way this stops is if the flows overwhelm the sophisticated traders. Where are those flows going to come from? Market maturity, when number go up, tech meets someone must lose reality. Next chapter requires fresh capital with fresh convictions, not just fresh leverage. Blackbird. Yes. Blackbird is one of the most interesting things going in crypto. Live in 500 plus top restaurants, they have found a wedge in building a loyalty rewards for foodies, helping restaurants to engage and retain their customer base. The Trojan horse payments. Fun fact: Diners Club was the first globally accepted charge card in the 50s. Ben Leventhal, mm, building Blackbird. Co-founder, Resi, Eater, Restaurants, Tech, Coffee. If you abuse the terms and conditions of Blackbird, I'm gonna jack that fly. The future of restaurant payments starts now. Flynet is live. Our purpose, built transaction network designed to cut fees, give restaurants control over their data, and create a new economy of royalty. Loyalty. Loyalty. Restaurants deserve better. This is how they get it. Arbitrum, Coinbase, Conduit. Complete roller platform with the best teams in crypto scaling their apps and ecosystems. And Privy. Craft crypto-enabled experiences for everyone like Blackbird, Farcaster, Hyperliquid, Zarpay, and more. Fly. Oh, let's post Fly. Memes are not securities, but rug pulls and market manipulation are still criminal and cancerous for the space. This is why anyone building a launcher or launching needs to take a good look at the market mechanisms underlying. We can get markets. Yeah, I don't understand what's happening with the right. What do we have here? Forecaster. Investing in internet that turns users into owners. Blockade, Forecaster, Flashbots, Magic Eden, Morpho, Phantom, Uniswap, WorldCoin, okay? Zora, Aptos, Hyperlane, Blackbird. Blackbird is pretty cool. We can do one stream on Blackbird too. This is Zora. Okay. Oh, page not found. Let's go back. We're posting meets trading. Oh, I like this page. So Zora app is now live, I'm guessing. Liability considerations recent. Okay, let's see. So I think we read the product. Oh, no, this is not the one. Why good AI needs crypto. So everybody's using different platforms. Okay, tables of content. Using ownership to solve the resource problem of open source AI. Twitter forecaster Zora. If you would like to share your ideas, what you're building, or feedback with us, please email us. All pitches should include a clear description and current progress. Hmm. Daniel, TLDR, the current state of foundation AI development. Okay, let's read the subheading again. Using ownership to solve the resource problem of open source AI. The current state of foundation AI development, dominated by a few tech companies, is closed and anti-competitive. Open source software development is the alternative, but foundation AI is not feasible to develop as a traditional open source software project because it suffers from a resource problem where the open source contributor is also being asked to donate compute and data costs beyond any individual's means. Crypto, through ownership, incentivizes resource providers to contribute to foundation open source AI projects solving the resource problem. Mm. Incentivizes resource providers to contribute to foundation open source AI projects solving the resource problem. Open source AI combined with crypto leads to better AI by enabling larger models and driving more innovation. We are actively investing in crypto AI projects and have a number of companies in our portfolio looking for high quality talent. If you'd like to help build this future, submit your information. In a 24 poll, 64% Americans said they believe social media has a negative rather than positive impact on the country. 78% said social media companies have too much power and influence in politics today. 83% said it's very or somewhat likely that these platforms intentionally censor political viewpoints they disagree with. Disdain towards social media platforms is one of the few issues that unites Americans. Looking back at how the social media experiment has unfolded over the past 20 years, it seems inevitable that we would end up here. You know the story. A handful of big tech companies captured initial attention and, most importantly, user data. While they were initially there was initially hope that this data would be open, these companies quickly changed course by shutting off access after using the data to build impenetrable network effects. This basically leads us to the current state of affairs where fewer than 10 big tech social media companies exist as little fiefdoms in an oligopoly, with no incentive to change because the status quo is extremely profitable. It's closed and anti-competitive. Examining how the AI experiment is currently playing out, I feel like I'm watching the same movie on repeat, but much more is at stake this time. A handful of big tech companies have amassed the GPUs and data to build foundation AI models and have closed off access to these models. It's already effectively impossible for a new entrant that doesn't raise billions of dollars to build a competing version because the barriers to entry are so high. Pre-training a foundation model costs billions of dollars in compute capital expenditures alone. And the same social media companies that won the last technological boon are using the control over proprietary user data to build models competitors cannot. We are full steam ahead towards recreating what we did with social media in AI, closed and anti-competitive. If we continue down this path of closed AI, a few tech companies will have unthrottled control over access to information and opportunities. Open source AI and the resource problem. If we don't want a world of closed AI, what's our alternative? Obvious answer is building foundation models as open source software projects. We have countless examples of open source projects that build foundational software we rely on every day. If Linux shows that something as fundamental as an operating system can be built open source, why should it be any different for LLMs? Foundation AI models have constraints that make them different from traditional software, which significantly stunts their viability as traditional open source software projects. Specifically, foundation AI models inherently require compute and data resources beyond any individual's means. The upshot is that, unlike traditional open source software projects that rely on people donating their time, already challenging problem, open source AI also requires people to donate resources in the form of compute and data. This is open source AI's resource problem. Let's look at Meta's Llama model. Meta stands out from its competitors in that instead of hiding the model behind a paid API, it publicly offers llamas weights for anyone to use for free, with some restrictions. These weights represent what the model learned from Meta's training process and are necessary to run the model. Having the weights also allows anyone to fine tune the model or use the model's output as input into a new model. While it is commendable that Meta publishes Llama's weights, it is not a true open source software project. Meta is behind closed doors using its own compute data and decision making to train the model, and it unilaterally determines when to make that model available to the world. It does not invite community participation from independent researchers, developers, because individual community members cannot afford the compute or data resources required to train or retrain the model. Tens of thousands of high memory GPUs, data centers to house them, substantial cooling infrastructure, and trillions of tokens and training data. Escalation in training expenses has effectively excluded universities, traditionally centers of AI research, from developing their own leading edge foundation models. Sam Altman mentioned the training cost for GPT-4 was 100 million, and that likely does not include capital expenditures. Meta's capital expenditure rose 2.1 billion year over year. And I think they just announced 35 billion. That is crazy. That makes so much sense. Like traditionally, these research centers where all the AI research used to happen, they cannot afford to do AI research anymore because they just don't, they cannot afford the actual training driven by investments in servers, data centers, and network infrastructure related to training AI models. Consequently, while community contributors to Llama might have the technical ability to contribute and iterate on the fundamental model architecture, they would still lack the means to do so. To summarize, unlike a traditional open source software project where a contributor is only asked to contribute their time, the contributor to an open source AI project is being asked to contribute their time and significant cost in the form of compute and data. This is really cool because now I clearly understood like what's happening. I still want to understand like what does it mean for weights, that what Meta is doing with Llama, but I was always curious, like nobody talks about Llama. I don't even use Llama. I don't use Llama a lot. Like I have on Instagram, on WhatsApp, we have the Llama button. We have the button for Meta's AI. I used to use that a lot with my little sister to just create a bunch of images because it's pretty cool. It's right in WhatsApp. But now I don't use it because I think Grok is really good. I would rather use Grok. I also trust Grok more because number one, it just understands context really well. It might have made a mistake, but it's really hard for me to understand. On the other hand, Perplexity made a bunch of mistakes, and now I don't really trust Perplexity. Yeah, I just don't see a use for Llama. Like similar for Claude, I just don't see a use for Claude. I know a bunch of people use Claude for coding, but I don't really code, so that's not the use case I have. But this was a really good explanation of the situation with Llama, and even though it's open source, what are the problems over there? It is unrealistic to rely on goodwill and volunteerism to motivate enough parties to provide these resources. They need further incentives. The success of the 176 billion parameter, again, this is a really good line. It is unrealistic to rely on goodwill and volunteerism to motivate enough parties to provide these resources. They need further incentives. You need to build a really sustainable ecosystem. You cannot just rely on goodwill and volunteer. And that's where good business comes into play. What's a good business? A good business is not a charity. You're not doing this out of goodwill. That today you are doing this out of goodwill, tomorrow your mood changed and you are no more doing that goodwill. Or tomorrow something happened to you and nobody after you wants to continue doing that. It breaks the system. On the other hand, business is how you build a sustainable ecosystem. They need further incentives. The success of the 176 billion parameter open source LLM Bloom, which involved 1,000 volunteer researchers from 70 plus countries and 250 plus institutions, is probably the best counterexample for the merits of goodwill and volunteerism to develop. I really like this line. Let me ping. Oh, I thought it's going to his Daniel's. It's PM Daniel. Hey, Daniel. Love the article, the blog. Love the blog on We are here. Okay, perfect. All right, let's go back. The success of the 176 billion parameter open source LLM Bloom, which involved 1,000 volunteer researchers from 70 plus countries and 250 plus institutions, is probably the best counterexample for the merits of goodwill and volunteerism to develop an open source AI. While it's certainly an impressive accomplishment, it took a year to contribute one training run and 3 million in grants from French research agencies, and that cost does not include the capital expenditures for the supercomputer used to train the model that one of those French agency already had access to. Include the capital expenditure for the supercomputer used to train the model that one of those French agency already had access to. The process of coordinating and relying on new grants to iterate on Bloom is too cumbersome and bureaucratic to compete at the pace of big tech labs. While it has been more than 2 years since Bloom was released, I'm not aware of any follow-up models this collective has produced. We need to incentivize resource providers to contribute their compute and data without the cost coming out of the open source contributors' pockets. While crypto solves foundation open source AI's resource problem, crypto's breakthrough is to use ownership to make open source software projects with high resource cost possible. Use ownership to make open source software projects with high resource cost possible. Crypto solves the inherent resource problem of open source AI by incentivizing speculative resource providers. Is the mic working? Let's do a quick check.